Good morning and welcome to this tutorial. In this section, we are going to learn depreciation. We will take a critical examination of the six elements of depreciation. At the end of this tutorial, we will answer some practical examination questions. Without wasting time, grab your writing material and let's begin. What is depreciation? Depreciation is the systematic allocation of the cost of non-current assets over its useful life. That is the definition given by IAS 16, that is International Accounting Standard number 16. I repeat it again. It says depreciation is a systematic allocation of the cost of a non-current asset, that is fixed asset, over its useful life. This definition did not just say allocation of the cost of non-current asset, but it says the systematic allocation of the cost of non-current asset over its useful life. That word systematic means that depreciation is not done anyhow, that there is a method or there are methods that this allocation is done, that this allocation of the cost of non-current asset over its useful life are regulated. IAS 16, that is International Accounting Standard number 16, deals with how and the method of depreciating non-current assets. Now, what is the purpose or what are the purpose of depreciation? Why do we do depreciation? Now, the purpose of depreciation is to allocate the cost of non-current asset as a non-cash expenses. I repeat that one, as a non-cash expenses over the profit or revenue of the period. That is to say, the actual reason why depreciation is done is to allocate the cost of non-current assets as a non-cash expenses over the profit or revenue of the period. The purpose of depreciation is to match the portion of the asset value that has been consumed as an expenses of the period with the revenue of the period. Yes, that is according to the matching concept of accounting, which says expenses must be matched with the revenue of the period. This is to avoid the overstatement of what revenue. Depreciation have impacts on the business. One, it will enable the business not to overstate their profits. It also ensure that um, dividends, or it reduces the payment of dividend, and it also reduces the payment of what tax. By allocating depreciation to the to match by matching depreciation to the profit of the period means that the profit of the period will be reduced. That invariably will reduce the tax payment and also affect the dividend or distribution, because the more the profit, the more the tax, and the more the profit, the more the dividend. So charging depreciation will reduce tax payments as well as reduce dividend payments, and at the same time make cash available for the business to carry on daily transactions. So that is the purpose of depreciation. Now we are going to we are going to define this a non-current asset. Non-current asset, what does it mean? Because we are not talking about all assets. In this tutorial, we are dwelling on non-current asset, that is fixed asset. Then what are fixed asset? We are going to examine what fixed asset is and some of the elements in the definition of depreciation. Now, what are fixed assets? Fixed assets is or are asset of material values. They are asset of material value which are of long life. They are asset of material value which are of long life. They are of long life. They are to be used in the business for or to assist in the production of goods and services. And they are not meant for resale in the ordinary course of business. That is to say, non-current assets are assets of material value which are one, of long life. They are of long life. Two, they are in the business to assist in the production of other goods and services, are used in the business for the production of other goods and services, or they are used in the business to assist for the production of other goods and services. And the third character of a non-current asset is they are not intended for resale in the ordinary course of the business. That means they are not meant to be sold. They are not stocks of the business. They are different from stocks. The phrase ordinary course of business, as shown above, means the primary activity of an entity. What the business is existing to do. It is selling tomato in the market, then tomato will be stock. And the shop will be non-current assets. So that phrase ordinary course of business means the primary activity that the entity exists to carry out. And this explanation differentiates non-current asset from inventory. Inventory are assets that the business is dealing on day by day. Now, ordinary course of business will mean normal trading activity of an entity. And because non-current assets are used for many years, then their costs are written off in the profit and loss account as a non-cash expenses. Depreciation is a non-cash expenses. This is to distinguish between the non-current asset and ordinary inventory. Instead of treating non-current asset as ordinary inventory, then we have to distinguish them. For instance, a business dealing on selling vehicle. The vehicle in the showroom that are meant to be sold are not non-current assets. They are inventories. But the building, the premises owned by the business is a non-current asset. While the vehicle or display to be sold are inventories, the building and the premises form, the non-current asset. So it is important to be able to distinguish between non-current assets and inventories. Let's go ahead. Now we have been able to distinguish between inventories and non-current assets with that common phrase, ordinary course of business. Now we are going to take a look at the elements of depreciation. We are going to take a look at the elements of depreciation. We have 6 elements of depreciation. The first one is the cost of non-current assets. The cost of non-current assets. So one of the element is cost. Secondly, we have what we known as the residual value or the scrap value or the carrying value. Then the third one is the useful life. The useful life. All non-current assets have useful life. Now, let me take a critical examination of the useful life. You see, non-current asset has useful life. They don't exist in the business indefinitely. There is a time that this non-current asset will be beneficial in the business. That is useful life. Every asset that is regarded as non-current asset is not having a limitless life. It has its useful life. That is a period of time in which that non-current asset will be beneficial in the business. Now, take note, any non-current asset that is having indefinite life, that is not having a limited life, is not depreciable. All non-current assets must have a lifespan, a limited life, a time to which it will be beneficial in the business. Now, let us go and talk about depreciation amount. Depreciation amount is the amount that is calculated as a non-cash expenses and to be written off against the profit of a period. Now, the next one is the method of depreciation. Like as we have explained before, method of depreciation is also an element of depreciation. And the last and not the least is the depreciation rate. Depreciation rate. Why are we studying this? Yes, we are studying this because these are the variables that you will be asked to find. You may be asked to calculate the cost of a non-current asset. You can also be asked to um, calculate the residual value or the scrap value or the carrying value. You could also be asked to find the useful life. You may be asked to calculate the depreciation amount. You also can also be asked to identify the method of depreciation used. And the least and not the last, you can be asked to calculate the depreciation rate. So you have to pay particular attention to these elements of depreciation as you are going to take them one after the other. You are going to take them one after the other. So you can write. I know some of you are writing. It is important to take down notes. This note will be referral note. The note will just go as lay hand on when you are about to write your exam. So let us take the first element of depreciation, the cost of non-current assets. Non-current asset, the cost. What are the things that make up the cost of non-current assets? So the things that make up the cost of non-current asset are the total cost of a non-current asset include all expenditure necessary to one, acquire the non-current asset, prepare the non-current assets. One, acquire the non-current assets. Two, prepare the non-current asset in the form that it will be used in the business. And the third is all costs involved in bringing the current asset to the location and condition that management intended to use it. So these are the things that make up the cost of non-current asset. But according to IAS 16, uh, plant, I mean, property, plant, and equipment, the cost of non-current asset are one, the purchase price. The purchase price is composed of one, invoice price of the asset minus trade discounts or any rebates, then plus import duty or non-refundable tax. Now, the purchase price of a fixed asset or non-current assets comprises three components. That is the purchase price. One is the invoice price of the assets. Two are and then we minus or reduce the trade discounts or any rebates. And you are going to add import duties and non-refundable tax. That must be properly noted. That is the purchase price of non-current asset. Invoice minus trade discount plus import duty or any rebate that is charged on the non-current assets. Let's proceed. Now, we are going to take a look at another element of the cost of non-current asset. That is, this one is delivering and handling costs. For instance, as we have said before, everything that we bring that fixed asset to where it will be used is part of the cost. The first one here is a transport charge. A second one is the freight expenses. And the third one is clearing and forwarding costs. These are the costs that make up the delivering and handling costs. These three costs must be incorporated into the cost of non-current assets. Now we continue. The next one is installation and assembling cost. That one is assembling installation and assembling cost. This installation and assembling cost includes installation labor costs, fixing, mounting, assembling costs, fixing, mounting, assembling cost, the cost of um, testing whether the axles uh, is functioning properly. These are the installation and assembling costs. Now, the D there, talk about at the site preparation costs. Site preparation costs. The cost of non-current asset also include the cost of preparing the site. Preparing the site when the asset, where the asset will be used. For instance, constructing, installation of a foundation for a machine, building the site for where the non-current asset will be kept. Now, the next thing is professional fees. Some professional fees are charging costs of acquiring non-current assets, and one of them is architect fee. Architect fee. Then engineer's fee. Then any other legal fee that pertain to the purchase and an installation of the fixed or non-current asset are also part of the cost of what the non-current asset. That is to say, professional fee that is incorporated into the cost of non-current asset are three in numbers. One is the architect fee, two the engineer's fee, and the legal fee related to the purchase, purchase contract or installation of the non-current asset. These are part of the cost of the non-current assets. The legal fee related to the purchase or installation of the non-current assets. Then the next element of the cost of non-current asset is the initial estimated dismantling or restoration cost. At times, before installing any fixed asset, we need to estimate the cost of dismantling that asset at the end of its useful life, or the cost of restoring the site at the end of its useful life. These costs are also incorporated as part of the cost of non-current assets. If the asset require dismantling or site restoration at the end of its useful life, this cost is also what incorporated as part of the cost of the non-current assets. Yes, these are added to the cost of the non-current asset as a provision. It is added as a provision that has a future value. The next one, that is G there, says direct attributable costs. Directly attributable costs. What are the directly attributable costs? The directly attributable costs are the costs like cost of texting the fixed asset, whether it's in good condition. There are costs directly related to bringing the asset to working conditions. Example is cost of testing the asset whether it is functioning properly. Yes. And by the time the testing is done, probably some output must have been produced. And the actual cost of testing is cost of testing minus cost of output produced. That is to say, testing cost proceed minus cost of output produced. Another element of the directly attributable cost is cost of employee directly involved in installation. Only employee directly involved in the installation. Now, let me make a point here. The testing cost will be the cost of testing minus the cost of any output produced. For example, if we have the cost of testing as $20 and during the testing some output that cost $15 has been produced, the actual cost of testing is cost of testing minus the cost of output. That is $20 minus $15. So the actual cost of testing becomes $5. That point should be properly noted. Now, let's go ahead. Now, the next thing we are going to talk about is the second element of depreciation. Do not be confused on what we are doing. We are picking the element of depreciation one after the other. And the first element of depreciation is cost of an asset. And we just finished analyzing the components or what make up the cost of an asset from A to G. And now we are going to take a look at the second element of depreciation, which is what are the residual value or the scrap value or the carrying value. That's what we're going to take a look now. The residual value is no any other thing than the value of the cost of the fixed asset at the end of its useful life. That is the value of the fixed asset as at the time that it's finished its work or in the business. That estimated value of the asset at the end of its useful life. What the business is expecting to realize in the from the asset when it is sold at the end of its useful life. That is just, the scrap value. If you don't call it the scrap value, you call it the residual value or the carrying value. And the scrap value is calculated as a depreciation, the cost of an asset minus depreciable amount. That is the cost of asset minus accumulated depreciation. Cost of asset, cost of the non-current asset minus accumulated depreciation. That is the total accumulated depreciation. We give you the residual value. Now we talk about the useful life. No current asset is used in the business forever. That is to say, all non-current asset has limited lifespan. The useful life of a non-current asset is the estimated period over which the asset will be used by the business. This period can be expressed in years. It may be expressed in number of years. It may be expressed in the hour of use. It may be expressed by the units of production. That is to say, this useful life of A non-current asset may be expressed in years, unit of production, or hours of use. Now, we're going to the next element, which is what depreciable amount. Depreciable amount simply means the total accumulated depreciation. The total accumulated depreciation of a non-current asset, and it is calculated as cost less residual value. The cost of the asset minus the scrap value of the asset. That is what the depreciable amount. Now, the next one we're going to take a look at is depreciation method. And depreciation is not just done anyhow. There are methods that is stipulated. There are methods that is used. One of such method is the straight line method. Before that, depreciation method are the techniques in which depreciation is calculated. The techniques used in the allocation or the calculation of of the depreciation. Now, there are about 8 depreciation methods that are in use, which includes the first one, the straight line method. Uh, the second one, the reduce imbalance method. The straight line method. Two, the reduce imbalance method. Then three, we have uh, the sum of the year digit method. We also have number four, and the revaluation method of depreciation is number four. We also have the unit of output, the machine hour method, the annuity method, and also have the sinking fund method. We shall be picking each of these methods one after the other as we progress. Now, the next one is the depreciation rate, the percentage used to compute depreciation is what the depreciation rates. That is, depreciation are computed, expressed in percentage. So the rate is the actual percentage used in the computation of what the depreciation. Now, we cannot continue talking. We have some questions that we are going to tackle to bring us to proper understanding of what we just learned. And these are the questions. We are going to solve this question. The purpose of solving this question is to enable you to have a proper understanding of this tutorial. Now, the first question there says, the process of allocating the cost of a non-current asset over its useful life is known as A. Depreciation, B. Extraction, C. Depletion, and D. Amortization. As you know, the process of allocating the cost of a non-current asset over its useful life is depreciation. So A is the answer to that question. Then two, you see, depreciation refers to A, the total cost of acquiring an asset. B, the estimated cost of a fixed asset utilized during an accounting year. C, uh, the revalue, the resale value of an asset. D, the profit earned from an asset. And you know the answer to that one is B, are the estimated cost of a fixed asset utilized during an accounting year. And question three, which of the following is not uh, a characteristics of a non-current asset? A, it has a long useful life. B, it is intended for resale. C, it is used in the production of goods and services. And D, as material value. One, A, it has a long lasting life, that is the character. B, it is intended for resale. So fixed assets are not intended for resale. And so that is the answer. And the answer for that one is B. Question 4. Which of the following is included in the cost of a non-current asset? A, insurance expenses. B, purchases uh, price only. C, transport and installation cost. D, advertisement cost. The answer to that question is C, transport and installation costs. Now, the next question, question 5, says residual scrap value is defined as the total cost incurred in installing an asset. B, the estimated, say B, uh, the estimated value of an asset of at the end of its useful life. And that is the answer. C, the value of the cost when purchased. D, the annual profit generated by the assets. So the answer to that question is B, the estimated value of an asset at the end of its useful life. Now, look at question number 6. It says, the following relate to the new plant. The following relate to a new plant. 1, the purchase price, which is uh, 2 million, and the charge, clearing and forwarding cost, which is 300,000. Then dismantling cost, which is 700,000. Then testing cost, which is 250,000. You see, proceeds from text output is 40,000. You are required to compute the initial cost of the plant according to IAR 16. IAR 16 is International Accounting Standard number 16, the regulatory framework that talks about how depreciation on property, plant, and equipment, the PPE, should be carried out. Now, let us try to tackle this. We know that the initial cost of a non-current asset is what? The purchase price. So you are going to add 2 million as one of the element of cost. Another one is the clearing and forwarding charge is going to be added. Another one is assembly cost is to be added. Then a dismantling cost is to be provided as a provision is also to be added. The testing cost is going to be added, but there is something you will do in this testing cost. In our learn in our previous module, we understand that testing costs must exclude the testing outputs. So this your testing costs here. You are going to minus proceed from text output. So you are going to reduce 250, which is the testing cost, from you are going to minus 40,000 from 250 to give you the actual testing cost, because during the testing some output was produced, and you have to take away the value of that output produced from the cost of testing. So, in a nutshell, every other cost, a cost of the asset, but less 40,000, which is output, the value of the output produced during testing. And a question, so you compute that one and get the value right. This is a question from the cost of uh, non-current assets. Now, we are going to take a look at the last question in this series. The last question says, a company purchases equipment for 8 million naira. Additional costs incurred were as follows: import duty 400,000, delivering is uh, handling and delivering cost is uh, 80,000 naira. Then site preparation cost is 220,000. So we are to solve it. Now, these are questions that you are going to attempt. You are going to attempt this question, and you will now send me uh, your solution, the first student in the class. So your time begins now. Each of these questions, you are going to use um, 30 seconds to answer each of these questions. The time I've started, so you begin to attempt the question now. You must learn how to attempt practice question, test yourself question, because to know accounts is to practice accounts. To know accounts is to do accounts. Practice make perfect. So you have only, let me say, less than 2 minutes to tackle this question. And those of you that are in the class now, I'm going to accept only 4 persons. The first 4 persons to submit their solution will be marked. So pick up a pen, and your time begins now. Your time begins now. While we wait, um, as you watch this video, attempt to like our tutorial, share our tutorial, and more so, practice the questions. We are not here to just to talk. We are here to impart knowledge to you. And if you have any query, any question, any contribution, any observation, you get in touch with us in our comments in the comment section. I will not hesitate to reply you. Now that section has finished. Another section, question 5, question 6, I know you have started already. Because of time I've started, it has been programmed. The 30 second have been programmed. Immediately the 30 second finishes for one question, then you ought to have finished that question and begin another one. Attempt it. I do not shy away from practicing. As you practice, you'll be well prepared. That is, practice is the foundation of knowing anything. If you do not practice, then you won't be able to become perfect. So try as much as possible to practice all or to solve all assignment, drills, home drills that are given to you in any tutorial. The last question is there, question 7. A number has the following cost listed. List price is 5 million. Trade discount is uh, 10%. Transport cost is 250,000. Installation cost is what? Installation cost. Installation cost is 150,000. Testing cost is 100,000. Costs sold, output sold is 20,000. You are required to calculate the total cost of the machine. Yes, that is your question. You are required to calculate the total cost of the machine. The question is on now, and you have to uh, begin solving it because immediately uh, the time is off. You pencil. Now, Jones, Smith, Kazmir, the first three, and Abdul finish. We are not taking another one. We are going to mark this question and yes, that B, 4B, 5B, 6C, and 7. That's quite impressive. That is 7 over 7. That's 7 over 7. A student has scored 7 over 7. That means the tutorial is quite comprehensive. That is that is good. Now Smith, 1B, 2C, 3B, 4B, 5B, 6C, 7. The figure is there. That is quite impressive also. That is good. 7 over 7. Now Kashmir, 1B, 2C, 3B, 4B, 5C, 6C, and 7. Oh, Kashmir scored 6 over 7. He couldn't make the last number. Now Abdul 1B, 2C, 3B, 4B, 5B, 6C, and 7. That is quite impressive, 7 over 7. Oh. And on this note, we come to the end of this tutorial. If there's any question, uh, get in touch with us in our WhatsApp number displayed on the screen or hit us in the comment section. In our next tutorial, which is going to be depreciation part 2, we will solve some of these questions, especially those that they did not get. Thank you for learning with us. Bye.